Hey guys, it's siu-yee. Welcome back to my channel and to the next episode of my tax series for 2021. Don't forget to like this video and subscribe to my channel for more related content. As many of you know, I have a couple of side hustles going on because I am trying to pay off all of my student loan debt. And in all of my side hustles, I am actually considered a self-employed person. So I took the liberty to look up the term self-employed along with the other terms that are usually associated with it. To start, a self-employed person is someone who is working for oneself as a freelancer or the owner of a business rather than for an employer. Another term you might hear with this is the term freelancer. And I'm gonna give you the real definition for it, but first I want to show you the definition that popped up when I googled it. Freelancer. A person who works freelance. Don't dictionaries know better than to do this by now? A freelancer is a self-employed person who offers services, often working on several jobs for multiple clients at one time. So everything that I do for my Upwork side hustle is actually freelancing. I write articles for a client and they pay me for the articles that I write. The only thing that is taken out of my pay is the Upwork service fee for using their platform to actually conduct business. So freelancing really gives you that freedom to choose what you want to do for however long you want to do it. The next term is an independent contractor. An individual is an independent contractor if the payer has the right to control or direct only the result of the work and not what will be done and how it will be done. Am I out of focus? I can't tell. I hope not. That would be annoying. Please tell me I'm in focus. Oh my god, if I was out of focus the whole time, I'm gonna cry. Okay, we back. We're on autofocus now. We're having a good time. The next term you should know is a sole proprietor. A sole proprietor is a person who is the exclusive owner of a business, entitled to keep all profits after tax has been paid, but liable for all losses. I am the sole proprietor of my YouTube channel, siu-yee. So when I filed my 2020 personal income taxes, I actually put in that I was a sole proprietor of a small business, as well as a freelancer in an art or writing category. Now that you know what these terms actually mean, you need to figure out what this means for your tax situation. So this is something that every self-employed person should know. There is a self-employment tax. This self-employment tax is 15.3% of your income, and you're liable to this tax if you have earned over $400 making self-employment income. Now, what constitutes this 15.3%? 12.4% of it goes towards Social Security, and 2.9% of it goes towards Medicare. Now, you may be wondering how you actually pay the self-employment tax because you don't have an employer. Self-employment tax is considered a pass-through tax. The taxes of a business are literally passed through to the tax returns of the individuals who own the business. The tax deduction isn't taken by the business, but it's taken by the individual taxpayers who own the business. It's not something that's double taxed, which makes it really easy for self-employed people to actually file their taxes. Now, it's really important to note that if you're going to make a significant amount of money as a self-employed person, you should be making quarterly estimated tax payments to the IRS so that you will not be charged an underpayment penalty for taxes. This is something that I'm starting to look into because in the past few years of being a self-employed person, I haven't really made that much money, but hopefully this year I'll start making a bit more, and so I'm gonna have to start getting better at predicting my income and figuring out how much I actually will owe in taxes every quarter. The next thing you need to consider are the deductions and write-offs that you can get as a self-employed person or a sole proprietor. Small business owners, YouTubers, listen up because this is gold. Let's start with startup costs. Now, before I actually did my taxes, I was fully planning on counting my camera, lighting equipment, microphone, whatever, as a startup cost because I had just started my channel and I was like, oh, that's a startup cost. My business is relatively new, but you know what? That's not a startup cost. Startup costs are the expenses incurred during the process of creating a new business. Pre-opening startup costs include business plan, research expenses, borrowing costs, and expenses for technology. Post-opening startup costs include advertising, promotion, and employee expenses. So because I actually purchased a lot of my YouTube equipment after I created my channel, that didn't really count as a startup cost. If you actually create the business that you're incurring these startup costs for, then you'll actually be able to deduct the following. Your actual expenses with respect to the new business, or $5,000 reduced by the amount by which the startup expenditures with respect to the active trader business exceed $50,000. The remainder of your startup expenditures is deducted ratably over the 180-month period, beginning with the month in which the active trader business begins. So it's really important to keep track of everything that you've spent to actually create your business, whether that's research or equipment that you bought ahead of time. I wasn't able to take advantage of this because a lot of the equipment that I bought actually took place after I started posting videos. Which brings me to business expenses. After the initial shock of realizing that I couldn't deduct startup costs, I realized that I could deduct business expenses. So I got a 2020 MacBook Pro so that I would be able to edit video without my computer crashing or slowing down, as well as the actual software program, Final Cut Pro, which is included in the Pro Apps bundle. The next thing I bought was my camera. Of course, that was expensive. My microphone, my SD card, my Joby tripod, my adjustable laptop stand for editing, my ring light, my softbox lighting, and then a dongle so that I could actually put my SD card into my computer, which does not have an SD card slot because that's what the future is now. And of course, I adjusted for the percentages that I actually use these items for personal reasons. And the total amount that I spent was $2,514.81. So I definitely wanted to make sure that I would be able to deduct these expenses on my taxes. Now you saw what I personally deducted, but there are many other categories of expenses that you can deduct from your taxes for your small business. These categories are equipment, business meals, transportation, travel, or even professional development. So if I wanted to take a course in video editing or film production, I could actually deduct that as a business expense because it's advancing my professional development in my business. Now, if I wanted to deduct an intermediate Italian course, that's not really gonna make sense unless maybe I'm making a video on it. But even then, I think it would be a reach. So again, keep track of everything that you're spending on your active business and what percentage of it you're actually spending towards your business if you're using some of the equipment for personal reasons. The next thing you can deduct is your home office. Now, with a lot of people working from home this year, this is something that a lot of people should be taking advantage of. However, there are some very strict stipulations for a home office. Your home office must have regular and exclusive use for that business, and it should be the principal place of your business. So for my most recent tax return, I actually took a home office deduction for my freelance writing work based on the simplified method, where you calculate the square footage of how much the office took place and multiply that by $5. For example, the home office that I used in my old apartment was 64 square feet, multiplied that by 5, and then I got a $320 home office deduction. Now, another exciting deduction that you can take as a self-employed person is the qualified business income deduction. You can deduct up to 20% of your qualified business income, along with the expenses and deductions that I've already listed. This is big. 20% of the income from your business will actually not be taxable. That is amazing because it really helps small businesses and it does not apply to any corporations. So now you have all of this information, but what do you actually do with it? First of all, if you're an independent contractor and you've made over $600 in the given tax year, whatever company is paying you for your services should give you a 1099 form. Now, there are many different 1099 forms. Figure out which one you need or which one you're getting, because that form will actually show you the total amount of money that you made providing that service for that year. However, if you're a freelancer on Upwork or something like that, you may not be getting a 1099 form, which is kind of annoying. So you just have to keep a good record of how much money you actually made providing your freelance services. Once you know how much money you actually made, you need to actually state this on your tax return somehow. And you do this by filing a Schedule C. The Schedule C form essentially details the profit or loss from a business as a sole proprietor. This form must be completed and included with your income tax return if you had self-employment income. In most cases, people who fill out Schedule C will also have to fill out Schedule SE, which is the self-employment tax. So these two forms go hand in hand. You need to know your income, and then you need to figure out how much tax you actually owe on that self-employment income. And from my experience using two different tax softwares for self-employment, it's been very easy to actually fill out. Aside from the income and the actual tax that you owe, you need to know what the code is for the self-employment work that you do. So for example, my art or writing business had the code 711510. And then when I filed my Schedule C for my YouTube business, I wrote in that that was internet broadcasting and the code for that was 519100. I didn't find internet broadcasting on the drop down for H&R Block. I actually had to find two kind of obscure sources to get this code because, to my surprise, there weren't that many tax references or information online for YouTubers, and I think it's something that should probably be better known, especially to help out smaller YouTubers who don't really have their own accountants and can't really afford paying someone to do their taxes for them. I actually found this one YouTube video from 2 years ago from Money Life TV. I'll link his channel below. He actually shows himself filling out his tax return for his YouTube channel and uses this code. I found another article online that uses this code. And then I found another blog or article online that used this code to actually illustrate their YouTube business on their taxes. That's kind of how I went around this. So make sure that you have the right code to actually file your Schedule C. You also need a business address for your business, and I just use my own address. You put in your business name and then you check whether or not you materially participated in the operation of this business during 2020. I put myself in these videos. I personally edit and film them, so I absolutely materially participated in my business. And yes, I acquired this business during 2020 because that's when I started my channel. I didn't make any payments that would require me to file Forms 1099 because then that would mean I would have hired an independent contractor to actually help me with some area of my business, like say editing videos. And then of course you list out the total amount that you spent on your business expenses, and for me it's in parentheses because it was a business loss. Now for my freelancing business, I actually ended up making $993. So the net loss was $1,522, and that's the amount that was deducted from my total taxable income for 2020. So even though I was mentally preparing myself to owe taxes this year, I was actually owed taxes by the IRS because I had so many deductions and business expenses that I was able to apply to my tax return, and that actually culminated in the IRS owing me money. So I'm really happy that I was able to start a business in 2020 and deduct the expenses that I actually incurred while operating my business. I hope this video helps you realize what actually goes into self-employment taxes and shows you that starting up a business can actually be something attainable and something that you can deduct on your taxes, so that any income loss that you may have from starting a business will not be as hard of a blow as it could be. If you're someone who's self-employed, I hope that this video was helpful. Please let me know if you have any questions or if you'd like me to talk about some of these things in more detail in the comments below. And I would really appreciate it if you could like this video and subscribe to my channel, because a lot of research goes into making these videos and I want to make them as helpful as I can for you to learn from. Thanks for watching. Stay tuned for the next tax series episode, and happy tax filing.